All right. Welcome to another episode of Tuesdays with Audie, and I am your host, Audie. So yes, our name is officially on the shirt, and now we can officially have a shirt to wear on this channel whenever I come here and do this episodes on a Tuesday. It feels good to have the official name on a shirt, and for those who've been here from day one, you know we've been wearing red from day one. So we're going to continue wearing red, but we're just going to have a TWA logo on it. For those who are new, welcome to the channel. And go ahead and hit the like button for everybody who are here today. And for those who continue being supported from day one, welcome back. And let's get into what it is that we do best on this particular channel. Before I start this video, I would just like to go ahead and state a disclaimer. I am not your financial advisor. I am not an expert in this field. These are just things that I've seen and research that I've did and opinions that I've come ahead to develop on my own based on what I have found. Do not make any financial decisions based on what you hear here, and please do not try these stuff unless you do your own research. Now back, you know once these glasses on, you know it's supposed to be real, right? But let's go. Today's topic is about the entire saga that was on the media, where it was the WallStreetBets versus the institutional investors, which are the hedge funds, and trying to determine what was going on with GameStop. Before we get into that, what is the stock market? And in simplicity, the best way I feel as though I can explain what the stock market is by this analogy. Ladies and gentlemen, here's the analogy. So let's just say it's Black Friday and we all are interested in buying an electronic device, and we decide to go ahead and go into the store. We know that Black Friday is one of the best times for us to actually see this whole entire supply and demand aspect come into place, which is what I'm going to do with this particular example. Let's just say 5 people end up in the store and there's one particular item that all 5 of these people want to purchase. How do we determine who is going to leave the store with this particular item? Do we go ahead and say the first person that came that saw the item is going to take it home, or can they just go ahead and punch it out, be savages as they usually, as some people would, in terms of just whoever the last man standing gets to take home the TV? Or can we be a little bit more civilized in terms of trying to determine what's the best way that we can determine who is going to take home this particular item? So here comes where the stock market plays a major role in terms of making decisions, helping us make these kind of decisions. The stock market is like an auction. Let's just say instead of those people fighting over this particular TV or saying first come first serve, someone steps in who is going to be in charge of the auction and say, okay, well, this is a TV that everybody wants. The demand, which is these 5 people that want this TV. Now, what's going to be the best price that I'm going to sell this TV at, so that someone from one of these 5 people leaves here with this particular item? Even though it's at a TV. We're gonna say it's a TV. This TV. It's clearly we all want to watch TV. So it's gonna be a TV. The stock market is pretty much this entire aspect. You have people bidding in terms of us trying to buy something, and they going ahead and setting a certain price that they want to buy something at. And you have people asking, which is sellers trying to determine what's the lowest possible price that they want to sell a particular position that they have to a particular buyer. Now that we have the same idea, so the stock market is pretty much people negotiating versus prices and trades and trying to make the best possible outcome in terms of people who buy in and the people who are selling. And that's pretty much what the stock market is based on in general. May not be a fact, but nonetheless, this is how I understand what the stock market is. Whenever we buy a stock, the entire aspect of buying a stock is that we assume, or we want the stock price to go up so that we can eventually sell it to someone who wants to buy it at that particular price that it's currently at, and then we can pocket the difference in terms of the price that we purchase it at and what we buy it, and we call it our profit, and boom, we are good and we made money. Everybody's happy. You sell it, the buyer buy it, everybody's happy, everybody goes home, they say, okay, well, I made the best decision possible, and we go ahead and we call it a day. But now, what happens when you look at it from another perspective? Short selling. What is it? Short selling is this entire aspect of, instead of you wanting the stock price to go up, you are betting on the fact that this company or this publicly traded company's stock is going to go down. Now, why would someone in their right mind want to go ahead and bet on something failing? It's like, who in society wants people to fail? I don't know. Look at the people around you. Look at the mindset in terms of what you say about the people around you in terms of them achieving so much, and then you want to kind of wish. You want to wish people well, but there are some people who don't necessarily want to wish people well. They want to wish them the worst possible outcome. And there's an entire aspect of then when bad things happen to people that we don't like, we say it's karma. But when bad things happen to us, we say, oh, these are lessons. But anyways, let's get back into the stock market. Short selling is the fact that people are betting on the failure of a stock price. And then if that stock price fails, then they can make their profit that way instead of it actually going up. I always like to think about short selling is the fact is that it takes stuff longer for them to actually build up. But when it's time for them to tear them down, it takes them a short, very, very, very short time for you to tear something down, as opposed to it being built up. So short sellers are pretty much betting on the tearing down aspect of a company that's being built up. So let's just say you purchase a share at $10, price is going to be $5. So because the price dropped by $5, you as a short seller made a $5 profit. The thing is that when they actually purchase those stocks, they don't actually purchase it with their own money. They borrow these companies at that particular price, and then by borrowing it, when it drops down to the price that is currently at, which is $5 in this example, they can sell it and make that $5 profit, and they can buy the company back at $5 and return the borrowed share to the broker, which in this case is going to be RobinHood that I'm going to be talking about. And then RobinHood is happy in terms that they receive the share that the borrower borrowed, and the borrower made the money that they wanted. So everybody's happy, and then we have a perfectly working system in terms of borrowing and returning it back to the lender. And so that's the way it works. But now another aspect of that is that what if you borrow this thing and you cannot return it? You know, this happens every single day. Let's just say your neighbor comes to you and say, okay, can I borrow some sugar? Like, who the hell borrows sugar? But anyways, let's just use this as an example. They say, can I borrow some sugar, and I'm going to return it to you some other day. Or for those people in terms of borrowing tools, and then you have to go back and borrow your own tools that someone borrowed from you. I know some of us in the Caribbean, we are accustomed to this. You have to go back and borrow your own stuff from the person that borrowed it from you. But now we are in the case that instead of the stock price dropping down, it went up instead. So when it goes up, the person who borrowed the share, now they have to go ahead and purchase this share at the current price that it goes up. And then by purchasing it, they receive this loss in terms of the difference between the price that they borrowed it at and the current price that they rise at. They have to go ahead and pay that difference between the borrowed price and the rise price. And so what happens if that, instead of it increasing by a small amount, increased by a large amount, which is what we saw with GameStop. With the fact is that it came from a small amount that the company was traded at, but it jumped up to, like, let's just say $60, $30. And now the person who actually shorted the company got to go ahead and now purchase this company at this new price and take on the losses in terms of the new price that it jumped at. And then by you buying this company at the new price that it's at, you are increasing the demand on the stock, which is now which is the short squeeze, where that you are increasing the price of this company, but then because you are shorting it, then you have to go ahead and purchase it at this price, which is making it seem as though it is more valuable than it is, which is continuing to increase the price because now more people are buying it than it would be on a regular basis in terms of the regular volume, which is the back and forth trading of this company that happens on a daily basis. Now that we have this general idea, let's get into this WallStreetBets GameStop saga and institutional investors. So we had RobinHood, which is the broker that was being used in regards to this entire outcome being played. RobinHood is a very interesting name. Most of us, if you were a kid that watched TV or even read books, you are aware of the story of RobinHood. RobinHood was that fictitious figure that stole from the rich and gave to the poor. Now that story sounds good by just it being that way, but as a curious kid, I was just the one that's like, if Robin is stealing from the rich and giving it to the poor, what happens when he steals all from the riches and give it to the poor? But doesn't that create an entire shift in regards to who is considered rich and who is considered poor? Think about it. It's like if you take all the riches from the rich and give it to the poor, now the rich is now poor and the poor is now rich. So now where does RobinHood stand in the middle of this? Does he now change his entire identity? Does he have an existential crisis like, oh my gosh, look what I did. I made the poor rich and now I made the rich poor. What does he do now? When the rich come to him and say, look what you did, RobinHood. You took from me and now I'm poor and now I have nothing. So can you please get me something? Now Robin has to go and take from the poor that are now rich and give to the rich that are now poor, and trying to balance in this entire aspect of society. And that is the funny thing about RobinHood in terms of this app, is that it created this entire existential crisis where it was stuck in the middle and trying to decide on which side of the line is it going to be? Is it going to be pro the retail traders, which is the regular person like you and I in terms of using the platform to purchase stocks? Or is it going to be more in favor of the institutional investors and the hedge funds that are using the same platform to do what they have to do in terms of the market? So now RobinHood found himself in the middle of this entire thing by the retail traders driving up the price because they found out that GameStop was shorted over 100% of its possible shares that it had in the market, which is unheard of. But anyways, we're not getting to that. And then you had the hedge funds in terms of them having it being shorted and these retail traders buying it and driving up the price. Now the hedge funds had to go ahead and buy the company at the current price that it was, which is sending the price up even more. And then the retail traders are just going and hoarding all the shares in this company, and the institutional investors have to go ahead and pay the price that they're currently at, and that means that they are in this entire term that we call a short squeeze, where it continues that they're buying it, the price is going up and up and up, and then the retail traders are making money, and the hedge funds are losing millions and billions of dollars because they shorted this company hoping that the price would go down, but instead the price went up. So RobinHood had to figure out, like, where do I find myself in the middle of all of this? And we are questioning the morale of RobinHood. So on the Wednesday when this was happening, there is this entire aspect of the stock market is that when there is a volatility, when there's too much back and forth trading of a particular security, which is stocks in this case, then they would halt trading for like 5 minutes or so to give investors a time for them to catch themselves. It's like, oh my gosh, this is too much. Take your time, catch yourself, and then we're gonna return to trading for 5 minutes after this. So every time RobinHood did it did it for like 8 times in a given Wednesday, and every single time that they actually started to back up, the share price just keep going up and up and up and up and up. It's like, oh my gosh, it's like these hedge funds are losing millions and billions of dollars. So what is it that they can do in terms of fixing this problem? So remember at the beginning I talked about supply and demand. We know that when supply is limited and demand is high, that causes the price of stuff to go up. When demand is low and supply is high, then the price of the supply got to come down in order for it to meet the demand that is low in the market. So RobinHood figured that, okay, well, since that there are high demand and limited supply, we are gonna have to fix this because we are gonna have to protect the investors and kind of help protect them from themselves in terms of what is happening in the market. So RobinHood decided on their own terms that instead of us looking for buyers, we are gonna just sell. We are just gonna limit the people to just sell the positions that they have. Now there are other stuff that can lead into terms of RobinHood making a decision, which is the fact is that if someone is trying to buy a security, they have a particular period of days that they have to find the security that the person is willing to buy, and making sure they find sellers for this particular security, and making sure that the buyers and sellers actually can make a transaction and close a transaction so that everybody is happy at the end of the day. Maybe there are some other stuff in terms of them not being able to kind of meet up with this particular supply and demand that was happening in the market, and that's what caused them to actually do this. But before they actually went and explain this is what RobinHood went and did. On a Thursday after this, when I said that this thing was the shares of GameStop were going up and up, they decided, okay, well, we're gonna halt people from buying this particular GameStop share, and instead we're just gonna make them sell. So what RobinHood did in terms of just making people able to sell their holding in this particular company is that they give this fake illusion of the fact is that supply increased and there was lower demand. So therefore, because if there's a higher supply and there is no longer demand in terms of people wanting to buy, so therefore that is gonna force the price of the stock to go down. And this is what RobinHood did to the entire particular thing. Then they created this false increase of supply and decreases the demand, because even though people are still looking to buy into GameStop, they force people not to buy any more shares, which then forced the share of the company to go down, which then helped the institutional investors to actually gain a profit, and the retail investors who was using RobinHood in order for them to purchase the shares in GameStop were no longer able to purchase it, which then forced them to sell because there was no demand. And because of this, now we have this entire aspect of, okay, well, who is RobinHood trying to help at the end of the day? Are they trying to help the retail investors, which is what they kind of went into market in order for them to do? Or are they more so helping the institutional investors, who has always been the key players in terms of the stock market, and making sure that there was this active trading and active transaction in the market and keeping things a balance or counterbalance, as I like to say best. That kind of aided in terms of everybody saying that RobinHood was manipulating the market in terms of what they did. Now, whether or not I agree or disagree with what they did, It's not my position for me to actually go ahead and do so. My opinion is that it's just that I'm coming here to give you guys what I think in terms of what they did, which is in terms of supply and demand chain, and that is what I felt RobinHood did. Now, morally, what's it right for them to do? RobinHood was stuck in the middle between helping the poor and the rich not being benefited, and now the poor was benefiting and the rich was not. So then they had to figure out, how do I balance this scale so that in the middle of this thing with RobinHood is the pivot. Like, how does RobinHood kind of make sure that everybody on both sides of this seesaw is balancing, is profiting or getting what they want at the end of the day, and then RobinHood can still kind of be in the middle and still helping the people that it wants to help. But then by doing so, you know, you can't please everybody, RobinHood. I'm just gonna let you know. It's like, if you were a human, RobinHood, you would realize, I mean, you humans, in terms of rational aspect, in terms of, oh my gosh, I'm gonna create something, and people are gonna be rational in terms of using this thing, and they're gonna use it to the best of possibility, and the best of its possibility. But like, come on, guys, you know people are not rational. I don't know why you guys, you Silicon Valley enthusiasts and you venture capitalists, think that people run on logic. It's like, come on, guys. The work is out there. Just take the time to read it, and you will see that people don't necessarily run on logic. They run on emotions. But anyway, you can't make everybody happy, RobinHood. I just want to let you know that you can't make everybody happy, and because you cannot make everybody happy, and you was trying to make the retail investors happy, but then you kind of, you know, step on the foot of the institutional investors in terms of the GameStop saga. Now you find yourself in the middle of this entire crap. You're trying to find out what is it that's going to be best for me at the end of the day, because I can't make everybody happy. But then, like, I don't wanna, you know, poke the bear too much, because the bear is the ones that actually pay. The bears are the one. I don't want to poke the bear too much, because at the end of the day, the bear is always been there. But I don't want to, you know, limit the cat down here who's trying to, you know, be a cub. But anyways, right? I don't even know if that make any sense. But yeah, so that's what RobinHood found himself in. You know, I feel as though they'd rather deal with a lawsuit than to cause the institutional investors lose too much money, because at the end of the day, it's like they depend on those institutional investors to help fund some of the projects that they want to do, and the retail investors technically don't have the capital in order for them to do so, but they want the retail investors to still have a fair chance in terms of the game. But what is fair at the end of the day? What do you consider fair? And if you have a vague definition of what fair is, then it's likely that you are going to not find yourself, you are going to find yourself in the middle of an entire situation where you lose your identity, and you tend to kind of lose the why that you went into doing this in the first place. And that's the thing. Once you lose your why, then I know, just remember, always remember your why, because when you start to lose yourself, that why is always going to bring you back to what it is that you truly value the most. And with that said, ladies and gentlemen, that is my entire take on this entire GameStop WallStreetBets saga versus the institutional investors and the hedge fund that has been so prevalent in the media for the most of January. So with that said, peace, love, and enjoyment. Deuces, I'm outie. Until the next one, see you guys next week, Tuesday. And once for all, hit that subscribe button and continue to show up, show out, and support. Maybe, you know, we start selling these shirts. Deuces.